everybody, good afternoon. My name is Aurel Trader. Today we're gonna talk about optimal entry point, so your ideal entry point, or perfect entry point, whatever you want to call it, in terms of a trade when you actually want to take a trade. As usual, I invite you with your questions, go to comments, go to the trading group in Telegram. We have Spanish speaking and English speaking community, and yeah, as usual, guys, don't be shy with your questions. So let's talk about. So as usual, what we're doing is we are defining our trend. So for example, here what we had is an uptrend. Just change the color. So let's say we have an uptrend here. We have consequently higher highs and higher lows. That's what we are seeing until we start seeing here. We start seeing here a lower low, and that's where we have our break of structure. So we would have here our CBOS, and here as well we would have our CBOS until we have a break of structure here. Just rotate a little bit. So we have a boss here. So what you're looking to do here is we're going to be using Fibonacci retracement. And what you're looking to do is you're looking to apply the Fibonacci retracement with only one level. So you don't need, you untick everything else. You just leave the half. Use the colors whichever you prefer. So in TradingView, Fibonacci retracement is here on the third. Again, you might differ, but also if you're on markets, option F, and you just drag it until the point you need, and then here in this little gear icon, you can modify the colors and the levels you need. So for this entry point search, we only need 0.5 level. I'll remove this here. So essentially what we're looking here is the break of structure. So the break of structure happened. That means that, again, let me continue the drawing. So that means that we are going to have downtrend from now on. So we're going to have lower lows and lower highs from now on. So we are having our lower lows and so on. But so what happened here is, again, what I want you to pay attention at, so we had our break of structure. So that means from this high, this is our key high, and this low, this is going to be your area of interest. So all of this is going to be your area of interest. These things, this is going to be your high. This is everything that we covered in the couple of previous sessions. And this is your key low. So what happens is, so you know that there has been a break of structure, and you know essentially that the price now, you're expecting the downtrend. You're expecting the price to go down, but it's very risky to take a position, to enter the position somewhere here, because you know the price is going down, but you don't know where it can go. So from here, if we just imagine we don't see this part here, I should actually remove the graph, but anyway. So when you're here, you don't know where the graph is going to go. So you don't have the graph can go directly here. The graph can correct and then go up. So you're not trying to predict the future. You're trading probabilities always. So what you're doing is you're applying the Fibonacci retracement and you're trying to take the trade from this area here. Because you know there is going to be some correction. So from this correction, this is your area. So anywhere here, you want to take the sell trade, whether you're on binary options or on Forex. So this is where you take the sell trade. And then what you're looking is the downtrend. Let me find you the same example. So as you can see, let's just continue here. The same trend. So we have our lower lows here actually. So we would have our lower lows, we would have our lower highs. I'm just going here. Until at some point we're stopping to have. So you see we have a first week high. And then we have, again, we have a higher high. So that's where we would see our break of structure again. So all of the way here, what we had was, we had our CBOS. So we had a CBOS here. We had a CBOS here, CBOS here, another CBOS, and so on. Here, here, and here. And so on here as well, until we see the break of structure. So we start seeing a higher high. We know the structure is changing. So we have another break of structure here. So again, we are at this point here. We don't know where the price will go. So we're not trying to predict it. We see the break of structure. We're expecting the price to go up, but we don't know if it's going to go up here or if it's going to go up here, or if it's going to accumulate or compress, or it's just going to form a straight candle up. We don't know this. So what we're doing is exactly the same. So we are at this point here, and we are trying to find our optimal entry. So, well, I'm technically in here. So I'm with my break of structure. So I'm seeing, for example, here some movements. Technically, I can enter from here. We can see this is basically some sort of a test of the area of our interest. So all of this would be our discount zone. So every time when we are talking about the buy entry, we would be talking about our premium and discount zone. And ideally, we would like to enter into the trade here. So as you can see, all of this here, this would be my potential entry points up. And that's how we would find it. So again, you see, cover, if you're not sure how I did this, go to the previous lessons. I'm trying to keep it short always, one concept at a time. But go to the previous lessons and find this on your graph. So literally take an asset where you are. So pick euro dollar, pick euro, Canadian dollar, AUD, anything you want, and do this exercise on the real graph. So it's the most effective tool. find the C boss, find the boss, find the break of structure, do this exercise where you would enter the point, and you can effectively see where you're going. So here we will be taking the long position. So this is how much we would be looking to earn. This is like if we're taking the super conservative approach with a simple risk management, we would be making we will be making this amount. Always pick your risk reward ratio. We will cover it in the future session. Okay, anyway, always practice, and this is it for this session. I will cover more in the next one. Thank you guys. Bye bye.